Hey there, Pat Strubbe, founder of Preservation Specialists. Each year there's a study of investor behavior and performance that I believe is really valuable for us to review. The study is completed by a company called Dalbar, and its full name is the Quantitative Analysis of Investment Behavior. Now, if you're like me and you prefer plain English, this is just a study that compares the performance of real investors versus the stock and the bond market. Now, not to spoil all the results from the year, but I do always find this fascinating for one primary reason. So many of us spend so much time and money obsessed with beating the markets or timing the markets or trying to guess what they will do next. And yet year after year, this study proves most of us are pretty much downright lousy at all of that. So if you doubt this, check the 2022 results. For the year, the S&P 500 was down 18.11%. You might think that should be an easy year to beat the market, but Dalbar found the average equity investor finished negative 21.17%, over 3% worse for the year. Now, if you think, well, that's cherry picking one bad year, let's look at 2021 because that was a very different year. In that year, the average equity investor was up over 18%. However, the S&P 500 was up 26.89%, over 8% higher. And if you look back a little longer, if you go back over the last 5 years, the S&P 500 over those 5 years has averaged 9.42%, while the average equity investor has earned 5.17%. So the difference is over 4% a year. Then one other stat I'll throw at you, the last one, the bond investor versus the index. The index earned almost zero. Over the last 5 years, 0.02%. The average bond investor has lost 2.31% per year, so they've lost over 2% more per year than the bonds have done. So all of this reminds me of a quote from one of my absolute favorite investing authors. His name is William J. Bernstein, and he says, he's written a number of books on investing. This is one of his last ones. He says, successful investing requires a skill set very few people possess. This is difficult for me to admit. After all, I've written 2 books premised on the idea that anyone given the proper tools can turn the trick. Once again, I was wrong. Having emailed and spoken to thousands of investors over the years, I have come to the sad conclusion that only a tiny minority will ever succeed in managing their money even tolerably well. So, what should the takeaway from all this be? Is investing hopeless? Should we bury all of our money in the backyard? No, of course not. All of this is why I spent so much time writing my last book, The Retirement Secret. This is what it talks about. It talks about why we have to invest and the strategies that worked so well over the years for the people that we work with to help them have a plan for retirement and to give them the peace of mind to actually relax and enjoy that retirement. If you or someone you love is on that hamster wheel of trying and failing to beat the market, reach out to us. Maybe we can help you by sharing our little secret.